Hey traders, checking in on the stock market today. Bears get the win with further daily consolidation and some rejections from clear resistance levels that we will look at. We have some news after hours that is impacting the markets negatively. We have the uranium sector breaking out in a big way, and Lori is going to give out an annual membership to the Swing Report. This Friday, we'll go over that. So the news after hours, Apple is having some issues getting chips, and they plan on selling 10 million less phones than originally forecasted. So just looking at that reaction, and it impacted the markets. As I keep saying, Apple is the most important stock in the markets because of its impact on the tech sector. So you can see the big flush down here and not really finding a bottom just yet. But look at what SPY did after hours, flushing down, QQQ after hours, dropping down. So it's impacting everything a bit. So one thing I want to point out, as I keep pointing out in these videos, is the benefit for using futures charts versus regular trading hours charts in many scenarios. Because if you're looking at SPY this morning, you say, okay, well, we're opening a little bit higher. And that's the information that you get pre-market. Meanwhile, if you look at the futures chart had me very convincingly looking in one direction this morning. Because at that point in time, as the open was rolling around, we had been bouncing for 6 hours. We did not confirm an hourly trend change. We're coming straight off the low. So I can say to myself, okay, what direction am I looking this morning? If I didn't know any of that information, I might be trying to bottom fish the low of yesterday on SPY. But knowing that we have to see hourly consolidation for a trend change to try and set up for the bulls, I'm looking bearish to start the morning for that hourly consolidation. And then I'm looking for an hourly higher low compared to the overnight lows on these futures charts, because it was a solid bounce and the space was created for that hourly higher low to form. From there, we had a very clear resistance rejection. We set the hourly higher low after weakness on the morning. We then tested resistance to attempt the hourly trend change. Higher low, rejection. Higher low, lower high, bear break. So it was an equilibrium. SPY had a very clear resistance rejection, but it was with the high of pre-market for 36.10. We rejected by 3 pennies. And then that equilibrium break, the bears ensured their end of the day close. And what did they do to ensure that confidence? Look at this rejection. We're now in power hour for 34.35, 35, 35, 35. If you quadruple top at resistance, everybody's watching the same thing. And if you can't get over that resistance, the bears have complete control. So that's the result. Everybody realizing, we can't break resistance. Bulls exit their longs, bears jump in short, and we flush down. So one thing to make note of, the only way that the bulls can save this overnight, even though we broke the equilibrium bearish, it is still possible to form a 4-hour higher low. But that's really it. That's all the bulls have to hope for right now, because daily consolidation continues. The pullback is more than the bulls would like to see at this point, because now we are favoring, at best, the bulls are hoping for a tightening daily range, because we have pulled back significantly. The retracement from this bounce is now 65% plus. So we're starting to get a couple little red flags. This is more retracement than the bulls want to see as far as to try and set up the daily trend change. So we can still form a daily higher low, but from there, we could just tighten up for another bunch of trading days. So no daily higher lows established. QQQ did the same thing, just with a little different view. But if you look at the hourly, it was the same 6-hour bounce that had us looking bearish to start the day. Hourly higher low, lower high, higher low, lower high equilibrium. It broke bear. And now with this Apple news after hours, the 4-hour is being tested. And if we break 4-hour support, it will increase the odds that the S&P 500 will break 4-hour support. So bears still have short-term control. Looking at the daily time frame here, size of the retracement on the bounce, 65% plus. No daily higher low shaping up at this point. So bears are in full short-term control. Financial sector, daily consolidation underway. No major red flags here. Still looking for a higher low, anything above 37.49. Bulls want that hourly trend change back in their favor as soon as possible, but it's going to be related to earnings. JPM has earnings to kick it off for the sector tomorrow, and then we have further sector names that have earnings Thursday and Friday. So the earnings reaction is going to dictate whether XLF sets a daily higher low quickly and is looking back at all-time highs, or whether the daily uptrend is at risk if we see a bearish reaction to the earnings. And we should see we should see names correlating with the JPM reaction tomorrow morning. I believe it's pre-market, double check me on that, but pre-market is what I'm going with. IWM is still tightening up, stood out a little bit stronger today, but it's still just chopping around sideways as we wait for this tightening range to break. Keeping in mind that the largest sector holdings in IWM are financial sector names, so there could be some impact on the sector earnings. Healthcare. Remember our weakest sectors that we looked at from yesterday to potentially give us clues. Healthcare has retraced 80% plus of this bounce, and we're testing the low of 124.50. If XLV breaks to a lower low, it increases odds that other names will as well. SMH was our other weak sector. It's right on top of the low as well. We've retraced 80% plus of this bounce. NVDA and AMD are standing out way stronger. So you look at SMH near the low. NVDA, much healthier daily consolidation. Even AMD, healthier, but names like MU dumping. So it's a mixed bag. The sector is not significantly correlating all these individual names. Some names are holding on well, some names are dumping, but SMH is approaching its low as one of our lead bear sectors. Biotech sector, still a potential daily bull flag. As long as daily EMA 12 is resistance, we keep grinding higher, but it's not a significant bounce overall. The dollar bull break on the daily, uptrend on the monthly, weekly, daily time frames continue. That's a point in favor of bears, market bears. The further we break out, the more notable it will be. It's not a convincing bull break just yet, but again, bulls complete control on the dollar. What's notable for me with that, again, the dollar right now is at the highest price that we've seen, highest level in a long time. So a year plus. But look at gold. Yes, there's an upper wick, but we are still holding daily support. And for me, as long as 1745 is holding, bulls are proving some strength. All gold wants to do, if I'm a gold bull, just trade sideways. Wait for dollar daily consolidation. Wait for a loss of the daily uptrend in the dollar, and then you can make your move to the upside. So holding support while the dollar keeps going up is a bit of a bullish indication for me. Silver, the key support that I'm looking at, as long as 22.21 holds, the bulls keep short-term control. And what also stands out to me is the miners are giving their first bullish correlation to the metals that we've seen in a while. The miners have been giving a bearish correlation and have been weaker than the metals for a while, a month plus. But today, it's the strongest close. We're up near the high, and the metals are not up near their high and didn't close near their high of the day. So that just shows me, and that's also with the broader market weak. So oftentimes you can look at this and say, well, the broader market was strong, and that's why our miners are up today. But that's not the case. So the miners showing a little bit of relative strength, and they need to break 31.36 to keep this move going. Keep an eye on AFRM. It's a fairly recent trader. The IPO was earlier this year. Why am I interested in it? Because some smart people in the chat room have been watching it. That's what got my attention on it. But all-time high, 146.90. Big time high volume breakout. A double top at the all-time high into a daily bull flag. So now we can say, if 132 holds, it's a daily bull flag with a double top at the all-time high. I would love to see the broader market set daily higher lows. And for AFRM, which doesn't trade correlated to the broader market as significantly because it's a recent IPO, and the more recent an IPO, the less correlated it is to the broader market. But I would love to see 132 hold, a new all-time high, and get some further momentum with some broader market confidence if we can set daily higher lows. We don't need those higher lows. That would just have everything ideal. But still keeping an eye on it. Lots of space for an hourly to try and form a higher low compared to the low today. And the bulls are buying dips. We flushed yesterday and today. And look at these bounces. Flushed to 135. We bounced $10. That's a notable bounce. It's a 6%, more than that. 7% bounce, flush drop today, 8% bounce. So bulls are buying dips and keeping that a potential daily bull flag. Uranium names, CCJ, look at that volume and breakout. And unfortunately, I was watching CCJ and trading it back here, and I gave up on it. I got lulled to sleep because we formed a daily equilibrium. And that's just a lack of focus or watching too many other things. But we had a really nice tightening daily equilibrium, maintaining the higher lows. And no fundamental news coming out today for this, but just an absolute ripper of a day. And there's a ton of uranium names. They all did this. It was sector wide. And so now we're looking at weekly higher low, very clearly established. And can we break 2657 for weekly breakout continuation? We had euphoria in uranium names. It cooled off significantly, but the bulls did not lose control. And you look at just another name, UUUU, big time breakout, solid volume. So standing out today. And let's just see how much follow through we can get. Certainly tons of volume and momentum. We're very extended. CCJ needs an hourly higher low, but this is the kind of name where, it's not a back burner in ideal conditions because it's not all-time highs, but after an hourly move like that, first 5-minute oversold conditions in a uranium name, you can be scouting for an entry opportunity. And let's say you don't want to chase a daily breakout, but you play a first 5-minute oversold bounce and it gets some bounce follow through and you can sell half and put your stop under the low at that point for very little risk or no risk. Then maybe the breakout continues and euphoria continues and you've got your position. So I never want to chase, but that's a scenario where I will look to attempt an entry if it is in my wheelhouse as far as an oversold bounce play, things consolidating a little bit, and a much better risk to reward versus chasing to the upside. So congrats to the uranium bulls. I know there's some diehards out there, and we've got one of our own in our chat room here. Big shout out to Red Devil, who has been holding it down, and a few others as well, but he is a uranium fiend and has just been for weeks providing all the info you could want as far as charts and fundamentals. And certainly he's getting paid today. So swing report, Lori on Friday morning. Tune into her live show, 8:30 a.m. Eastern. She's going to give away a free annual swing report. And just an example of the swing report here is a prior issue. And you got your weekend review, your market wins, where she's looking at the big picture overall and all the different sectors, the individual trade alerts and their stop levels and buy zones, and a whole bunch of information. So thanks, Lori, for doing such a good job with this report, and the other people that are helping as well. We have a few team members on it, but just want to highlight one trade a month ago that's gone really well and is almost hitting its sell target. And again, just an example, little write-up of the setup as to why it is on watch, and price at time of the highlight, 33.61. So the report came out over this weekend. We gapped down open right into the buy zone. That next Monday, the key level to hold was 30.58, which she drew here on the chart, key support line. So buy zone, 31.33, conservative buy zone, conservative stop zone under 31, and it was right in the wheelhouse as far as just opening right into that zone and then taking off. And the sell target is approaching 44.39 plus or minus a couple percent. So approaching those levels very quickly. And it's definitely been a tricky market as the market conditions have been changing, the macro market conditions over the last month plus with this broader market pullback. But MOS certainly one of the better performing names, continuing its breakout. And that was essentially a monthly bull flag confirming and a cup and handle in the sense that we had a little double top of resistance. Not a good cup and handle because the right side was higher than the left, but forget I said that. It's a clear break of resistance with a lack of resistance immediately after those levels. So tune in, live stream, 8:30 a.m. Eastern, Friday, and she'll be giving away one of those memberships. All right, I appreciate you tuning in. Have a good rest of your day. Don't forget to do good things. Still scouting those daily higher lows. I have a little bit of a bullish lean looking for these daily higher lows, but again, I can't let that develop into a bias because clearly the bulls did not prove it today, and at no point did they convincingly prove it. So we have to ensure that even though I'm looking for a daily higher low and maybe have a bullish lean, I have to be able to say, nope, nope, not proving it. Bear's still in control. And that was the case all through today. And that hourly resistance rejection really set the tone on SPY when we dropped hard because we had a breakout from a short-term falling wedge type pattern but look at the size of the pullback. That's just not a 5-minute higher low to give it another attempt. That's a big drop and red flags for the size of the rejection follow through. All right, see you next time.